Hey, what is going on, guys? Another week, another grind. Hope everyone's having a good Monday morning. It's 10 o'clock here. We're doing a plumbing business today. Well, it'll be all week. We're going to get this model done. Let me go get the link out to Twitter. Sound check. Sound check. Sounds good. And don't forget, guys, check out all the different financial models and templates and calculators I've built at smarthelping.com. I've done all kinds of different things, all different industries. The model I'm doing today, plumbing business, that's going to be included in the industry specific bundle. Probably just a $45 template. And I believe I'm going to introduce a new bundle called service industry because I've got a lot of different business models that are just for providing services. And this is going to add to that, obviously, plumbing services. So I'm gonna make a bundle specifically of all the models that are for that, and I'll probably put it on the sidebar down here with all these other bundles that are not on the top section. Okay, so let's see. Plumbing business. So what we're gonna have to do is I have never run a plumbing business, but I am very good at building logic for forecasting financials. So let's just start, you know, how to run a plumbing. No, actually, I'm going to look at how, and I'm assuming a plumbing business, the basic structure we're talking about is some person or group is going to be the owners, and they have contractors that are plumbers that go out and do jobs, and then the business takes a fee. So that's the general highest high level model, but let me just look at this. So how does a plumbing business make money? Let's just start there and just see what we could find. So yeah, flat rate, possibly materials. Um, I know when our guy came to do some plumbing, uh he had some materials, but I don't really think we need to account for inventory. Well, maybe, I don't know, but we're definitely going to have a line item, obviously, to account for the cost of materials. Um, I think. So plumbing companies charge a flat rate, sometimes plus materials for jobs. I think honestly it'll just be like, okay, we'll do like a count of different jobs, maybe three different job types, you know, X cost, Y cost, Z cost, and each of them will have different margins, and that margin will take into account if there's generally for that type of job, if there's materials required and all that other stuff, it'll all be built into the price. Um, However, they also may charge per hour or premium charges for emergency rush or off hours. I know that happened if you need something done immediately. Jobs can be priced per hour flat rate. However, the average price for a plumbing service tends to be between. Now, I've noticed it's usually a flat rate, so that's probably what I'll do. I don't think I want to do it based on an hourly basis. Like you'll have a bunch of different plumbers and they get paid hourly rate. I don't think I'll do that. Let's see. Master plumber running a one-person company makes $45 per hour. So we're not doing this. This is not a model for just a single person to run their own, just and they do all the work. Um, if I'm costs are between 10 and 20,000, so 8,000 net profit. Typical plumbing company pays its plumbers. Okay, here we go. A typical plumbing company pays its plumbers between 20 and $40 per hour. Yep, because that's what we're doing. We want to build something that can scale out. Like you're running a plumbing company, you got a bunch of people working, doing jobs. Okay. Yep. So this is the model we want. So the model we want is you're going to have plumbers working for you that you pay a rate, and we're going to have to figure out how many hours they're working and what the company can charge for those hours. Now, this is tricky because the question is if we drive revenue based on just X jobs per year or month or whatever, and there's some amount of revenue there, how do we tie what jobs were, how many hours each job took? Well, I guess we could define that as an input, so average hours per job, and then whatever you pay the plumber. I mean, I know when I had something done, we paid $1,000 and it took like 2 hours, and I'm assuming the plumber only got like apparently $100 for that, and then the company took the rest. Well, I guess so. All the actual numbers are going to be arbitrary. I just need to make sure I have the logical structures in place. So how can you be scaling? Yep, scaling. That's what we're trying to do. Offering more services. Plumber and electrician team might team up. Profits can be increased by contracting with construction companies. Remodels. Yep, for sure. Okay. So this is interesting. Cost involves an opening and plumbing business. This is definitely going to be good. So I'll have a whole CapEx schedule for all of this stuff. Certificate, pipes, yep, all that stuff. All this equipment is going to be based on the margin of the jobs, the cost, and that'll be we'll have labor costs for the jobs and equipment costs. Now here we're saying initial equipment 5,000, but there's obviously that's going to be used up over time. Ongoing expenses are just going to be the labor cost to pay people and then any equipment or materials, vehicle maintenance, right? Because you'll be having to supply the plumbers with their own vehicles, I'm assuming. Okay, so this is good to know. Let's look at some more stuff here. Let me save this link. Let me do economics of a plumbing business. Plumbing business generates $110 billion a year, according to IBS World. Yep, it's obviously in demand. So see here's Z plumbers. That's just not one guy. That's like a whole group of a whole company. This is just a franchise opportunity. Let's see. Complete guide on how and why to buy plumbing business. So the logic will be kind of arbitrary. Doesn't matter if it's what type of job it is, residential or commercial. Estimating process. Yep. Ooh, what's this? So underground plumbing work includes jobs on sewer lines, water mains, gas lines. This can be commercial or residential. A typical plumber can take years to get to the skill level, though it can be possible to hire plumbers who already have background. At this level, trucks usually bring, I'm assuming that they mean a truck as in one guy and a truck and what he can do in a year, can bring in between 350 and 400,000 each. Importantly, at this level, gross margin tends to increase to between 60 and 65% simply because there are far fewer companies doing this type of work. As you're all at this tier, you're making significantly more profit. Okay, so these tiers are good to understand. Obviously, higher gross margins means higher EBITDA. It's just math. Licensing. Okay, so I have a good idea of how we're going to do this. I think this is actually very good. Tier 1, 2, and 3, these are kind of standardized, so I can drive revenue off of these different tiers of work that's being provided. Yearly revenue per truck. All right. Well, I'll tell you this. This model is not going to be as nearly as complex as the assisted living thing we did last week. Well, the last 2 weeks actually that was a big one. But there's some cool stuff here. There's definitely some unique things specific to just the plumbing business, so that's good. Um, so what I'll do is we're going to start by let's structure some things here. So we'll have a basic global control. Let me just import that. That's not a huge thing. That's just some global assumptions here. I just like this formatting. So just general stuff about the timing, the name of the company. We'll call this Plumbing Co. And that is one of the big uses of the models that I build are to figure out the economics of scale. Usually, if you're doing something really specific and it's just, a couple things, you can usually do a back of the envelope calculation. But with this type of financial model, it's designed to help you see a lot of different levers and pull a lot of different levers as you're scaling a business up. And it's harder to have all that on like a back of the envelope calculation. So we'll have this, we'll have a validation tab, we'll have revenue assumptions. This is going to be the big one we'll spend probably most of today on. Get our coloring in here, light yellow for editable assumption tabs. All the drop downs will be based on validation. So as far as the timing of this, um, I think 10 years is fine. So 120 months maximum. And then this will be based on all the drop downs will run off of this schedule here. Some guys like to model, they like to just do years and months and not put an actual date. But I think if you're going to show this to investors or you just want a good sense of the timing, I like to put dates that go along with the month and year numbers over time. I think that's more of a real simulation when you actually can put real dates to it. Now, it does require more advanced modeling and some more advanced logic, but I think it's worth it to have it. So here you could determine the end month. If terminal value is going to be included, this will be updated. The valuation, probably just based on EBITDA. Some trailing 12-month EBITDA is going to be in a multiple of that will be the value. Cash sources. So here we'll just do, so like in the assisted living model, you've had things where you're going to be developing possibly having costs over time on a monthly basis. But for this plumbing business, um, if you're scaling, you might have some burn, but in general, I believe the infrastructure I use where basically we determine the total startup costs and then any burn that happens, the essentially take the minimum cash position and have that be the upfront equity required. It's not likely that you're going to have new investments in like year 4 or 5 and 6, even if you're scaling, because in this plumbing business, scaling just means adding plumbers. Now you might have to add equipment trucks and stuff, which will be defined on the CapEx schedule, but it's likely that at that point, enough cash flow has been built up that you're not dipping into new equity. You can just use working capital. So this will be a pretty straightforward capital structure and equity requirement solve. So that'll be that. We'll have to get the cap table in here. That'll be done at the end. Just clear this out for now. Well, actually, we'll probably use these references. Just remove the workbook reference. Okay, so that's fine. Now, we got to think about, hey, what's going on, everybody, by the way? Didn't see if there's anybody in here viewing. We're doing the plumbing services. I've spent the morning looking at some different ways to run a plumbing business and the different things you got to take into account. And I believe it's going to be run off of these tiers of service that you can provide. So if I go here on revenue assumptions, let me just paste this in here. So we know there's going to be, as a plumbing company, your revenue is based on the amount of jobs you do and how much you're getting paid for those jobs. And then you've got costs like you're going to have to pay for the trucks for your plumbers, you're going to have to pay for the equipment, and you're going to have to pay the plumbers an hourly wage. So there's a couple things we have to do here. So let's start just thinking through this. Revenue assumptions. All right, so we're going to have, this is going to be a 10-year model. So we want assumptions for each year as you scale. And we want to define, so for revenue, we want to talk about, let's think about it. So we could say, let's see, what's the best way to do this? Count of jobs. No, let's go tier 1 services. Count of jobs. And we're going to actually make a new column here. So I think the best way to this is I don't want to just define the monthly amount of jobs completed and change that each year because you don't get a really nice curve. You just get a straight amount and then up, straight amount, up. That's okay. It's not bad. But what I want to do is a smoother growth pattern. So you can now do a starting job count. Let's say the company just started, you've got a couple plumbers, you're going to do, let's say, 4 jobs a month. That's probably going to be more than that, like, let's say 20 for the first month. But then we want to know, well, what about month 2 and 3 and 4? So we can define monthly growth rates, and the growth rate can change each year. So let's say you grow at 3% per month in year 1. So you start at 20 month 1 jobs, starting job count. Per month. And then we have growth, monthly growth of job count. So that just gives you a way to say, okay, I'm doing this many jobs per month. Month 2, I'm doing 3% more. Month 3, I'm doing 3% more than that, etc. That's the best in practice way to model growth that I've found for just general, kind of generic revenue assumption drivers for something that is based on accounts happening, and you're charging some amount for each time. Okay, count of jobs. Actually, we can just put this here. Starting job count per month, monthly growth of job count. And there's no way to show this on here. I can do an index formula once we have the monthly detail and like say at the end of each year how many jobs are being done each month. Right. Now about each job, this is where things get really specific to plumbing. And really the model I'm doing now, this model will be applicable probably to like an electrician company. What are other contracting jobs? Electrician, plumbing, uh, anything where you've got professionals going out and working and doing jobs for some fixed price, and you're paying them a monthly, or I mean a hourly wage. Okay, so tier one services. Here's how busy you are with them. Let's see. So we have a job count. We have average ticket value charge to customer. So now this one we can probably just assign an annual amount to because it's not going to probably it might not change over the entire course of the model, but we can do an annual change if necessary. So on our thing here, we have a truck can do 200,000 a year. Um, I don't really know how many jobs that would be equal to, so I can't really put a number around that, but we can just assume. Well, let's see. Does tier 3 say? No, none of these say the average cost or price per job. It's just I can go, these are 200, so this is 300, so it's 50% more, and then this is about another 25% higher total value. So let's just go average $200 a job here. Now here's where the tricky part comes in. And I'm trying to think about how to do, I have to think about how to tie wages in with this. So somebody has to do the work, obviously. And let's say I do 20 jobs in a month, charge customers $200, that's $4,000 of revenue. Now I have plumbers doing this work for some hourly wage. So what I can say here is average hours per job. Let's say these jobs take, you're charging $200. Let's say they take an average of, I don't know, 1.5 hours. We can then put, so we'll know how many jobs happen, how many labor hours per month are required to make this revenue. Then on our cost assumptions, we'll have to put in. So yeah, so the model is actually going to solve for the plumber count that you have because it's going to show how many total hours you have per month in billed services, and then your average plumber rate, and then based on then you have to define what the average plumber does per month, and then there'll be a division problem to just be manual output for the average count of plumbers that you have over time. I think that's the best way to drive your plumber count is how much business you think you're going to be doing. Okay, so this is pretty cool. This is new logic. I've never done this specific revenue logic. I love when that can happen, so that's awesome. And this is pretty wide use case. So let's put our years here. We could put the actual years. Where are we here? Okay, awesome. I'm trying to think anything else. Uh, I guess we could say we also want to know, I know it's a revenue tab, but we kind of want to see directly what the um, average equipment cost. Pipes, anything, pipes, anything. I just want to say like anything that you're not going to be depreciating. So stuff you use on the job, you use it, it stays at the house you do the job at, or it's not like a drill where it's got depreciation or other tools. Uh, Parts. Actually, let's just say pipes or parts installed. Yeah, that's fine. So you do a $200 job, it costs you average of an hour and a half in labor, and then you also have equipment costs, which the company will be providing, not the actual plumber himself. The plumber's just going to make an hourly wage. So equipment, this would be maybe, I don't know, a $200 job. I don't know, maybe $30. This is arbitrary. The point is you'll be able to define this, and it should be flexible enough to be able to make sense. Let's see, anything else? So this and these pipes and stuff will probably do some inventory logic where you're going to buy the expected cost, like this will be a cost of goods sold. I'll probably have some inventory logic that says the amount of months you're going to buy this stuff for ahead of time based on your expected usage. So there'll be a little bit of cash flow logic there. Trying to think if there's anything else here that we need. So we have the amount of jobs happening, what you're charging for the jobs, the labor it costs to do the job on average, uh, installed parts costs, all the fixed assets and equipment will have a different schedule for that. Um, Clear this out. Let me look at this and see if there's any other ideas here. This is all labor stuff. You could. Yeah, I don't really want to work on a per truck basis. I want to work on a job count basis. And then, the amount of trucks you have could be a fill possibly to say, well, if an average truck can do X jobs per month and you have this many jobs and you have this many trucks. But then you would have to line up your truck count over time with the CapEx schedule for purchasing. And maybe you might want to purchase the amount of trucks you think you need each year, um, by that amount uh, as a tranche. Yeah, I'd rather do it on a per job basis, not a per truck basis, because I mean, so if you're doing it on a per truck basis, you would just define starting trucks, the average value, but see, you don't get into the per job. The per job economics, I think, is the most granular and the most flexible. And based on this, we can define how many trucks be there will be over time as a division output, just like so let me put a note here so I don't forget. Truck count and plumber head count will be outputs based on activity assumptions. So I don't forget that. And then, so we have tier one services, tier two, tier three. Since they're all like the same exact logic is going to be for all of these. I don't think there's any reason. Let's see. Yeah, this is just, it might require different material costs, obviously different charge amounts, different labor costs, different margins, but all that can be defined with what we just set up. Like the trucks are the same for each tier type, so that can be the division problem. The plumber count is the same. I mean, well, no. The plumber count we can drive based on each service type. I guess the same as the truck count. Make plumber count specific to each tier. So you can see how many plumbers you have at each tier. Now for reference, so I believe, now what's Acquira? Do I want to link them? It's just like a general business thing. All right, we'll put for reference, because I'm directly saying tier 1, 2, and 3, which is based on this website. So I'll do for reference C, and that can be linked. Okay. Now, any other, well, let's just, so this was what, 50% more, so 300, and this was like, we'll just go 400. Now, I'm just going on percentage. I don't actually know what the average value of each of these jobs are. Um, that's going to have to be researched by, if you're running this plumbing business, you probably know a bit about plumbing, so you could have insight there. Um, but the point is, this is flexible enough so when you put in the logic, it will work. So here, and then let's say these jobs take maybe 3 hours, and these jobs maybe take 4 hours. Oh, why is that decimal not pulling there? Ah, it's just general. Okay. I mean, and these can be really big jobs. Like let's say tier 3 service average price is, let's say, I don't know, $5,000, and it takes 30 hours, and average equipment cost is like 1,000 or whatever. It could be different for every one of these. Point is, we got some nice unit economics here that can be applied directly to how the plumbing business makes money. And I'm feeling pretty good about this. This is looking good. It makes sense to me. I'm just making all these pretty much the same. Uh, okay. So this is good. So we have this. Now, what I will need to do, and possibly, what's going on, guys? Hey, we got some people in here. Um, So we've got our revenue assumptions pretty much built out. I don't think much will be needed, but if we need to modify it, that's fine. Uh, so for expense assumptions for a plumbing business, there's going to be some pretty generic things like fixed cost schedule, which is just common. Just you'll have start month of the cost, the description, and the monthly amount, and then you could change that over 10 years, and it could be for all the general administrative stuff, licensing. So we'll get into that, but what I want to focus on now is the variable cost per essentially based on what jobs are being done, because that's going to be the hardest. So let's look at this. So expense assumptions. I want to do uh, variable costs. Um, and we can do this over a timeline as well. That's 15. So variable costs in this case, we definitely know labor, and there's going to be tier 1 labor, tier 2 labor, and tier 3 labor. Because you got to pay the tier 3 guys that are doing these other jobs that are more difficult and require more, probably more expertise. You're going to pay these plumbers more than what you pay a tier 1 plumber. So labor cost per we'll go tier 1 hourly wage. And the reason why we're breaking it into hours is because the amount of work being done is based on hours. And then that's how we're going to define actually how many plumbers there are over time and what they're paid. Now, like as we read, there's other situations where you might do a flat rate or give the plumbers some commission, or who knows what there could be. But the most common thing that I saw and what I was looking at was, you're just going to have hourly wage workers, and they do the work, and you get the work for them, and that's just how it goes. There will be benefits, payroll taxes, benefits, all that stuff. All right, so hourly wage, let's say these guys maybe make 20 an hour. These are at 40, and these are at, I don't know, 70. The point is, you'll see as once the model is done, the user is going to be able to go through here and play with these numbers and look at how much you're making per job, what are you paying for labor, and see, what looks feasible. So we have this. We also want to put payroll taxes, benefits, which will directly apply to the total cost of these times hours worked. Let's say 15%. Okay, so that's variable. This is variable. We have, what else? So we already have the average cost of equipment in here, just so you can kind of see. I want that to be in here so you can see the total value versus your variable. Now the hourly labor, you're gonna have to kind of just look over here at what you're charging to get that number. But I wanted to put, um, you know what? If we're gonna separate it all, let's just separate it all. We can't have one part separated, one part not. So let's put these over in here. And then I'll do a calculation that will show, based on the average single job type, what's the margins, and I'll put that right here. Those will be calculations though, so let me also add Add calcs to rev assumptions that show profit per job based on labor costs, include payroll, tax, benefits, and parts cost. So we'll probably do that tomorrow. I just want to make notes here so I don't forget. Alrighty. So variable costs here, the labor wages, payroll tax and benefits, the cost of equipment, and we can just say average equipment cost, and then we'll just do tier 1, 2, and 3. Okay, so this is pretty good. Um, Variable cost, payroll taxes, benefits, average equipment cost. What other so you might have just other general costs per month, like maybe upkeep of licensing, or I don't know. Um, we're just gonna say other variable costs per plumber per month. So here you could put in, let's say, on average per month you have to pay for plumbers, I don't know, uh, maybe upkeep of licensing, um, whatever it might be. There's definitely a lot of uses for this. Let's just say per tier 1 plumber, the cost per month is, who knows, let's say $30. Tier 2 it's 35, and tier 3 it's 50. And this could be also like perks or just something that you budget for plumbers that you give for them to do something. I don't know. But I think it's relevant to have that in here. And if it's not applicable, you'll be able to zero anything out that's not relevant to your specific strategy. Well, so far this is looking great. I can't wait to put all this together into a monthly summary. We'll add more costs here for like fixed operating costs. Um, Probably credit card fees, a percentage of, because some people might pay with check, a lot of people might pay with credit card, so we can do some percentage of total billings that are paid with credit card and the amount of fees there. That'll be another variable cost we could put in here. Let me put this down here. Actually, these are one line item items. Percentage of revenue paid with credit cards, credit card fees. So let's say, I don't know, 75% paid with a credit card, and that fee is, 2.9%. Okay, what else? Variable costs. We're paying them, equipment, other, let's see. So insurance, I guess, so for scaling, if you're going to have, yes. So you might be able to fit this into here, variable cost per plumber, because the kind of plumbers is going to be tied to how many trucks you have as well. That's all going to scale, but we might want to separate out. Let's move this down here. Let's say we want to put in um, average in monthly insurance per truck. And maybe there's different types of trucks for tier 1 through 3. If not, they could just all be the same, but there's a monthly insurance cost. Let's just say $100. And that can also adjust over time. So once we solve for truck count, which we'll do based on the amount of jobs a given truck can do. Well, no, we'll probably just solve. So we're solving for the plumber count based on the amount of hours a plumber will work in a month and the total billable hours that the company's doing. And then each plumber has their own truck. So you could technically do that cost in here, but if you really want to separate out insurance, since it's kind of a different item, we can say, okay, there's X amount of plumbers, there's Y amount of trucks, and so the monthly insurance cost is going to be that. Because we really want to focus on scaling this thing with the proper economics. And so that's better than trying to manually hard code in the annual insurance cost just by kind of in your head math. This will give it a easy input. Any other variable cost? Um, Insurance. Let's think about this. I guess maintenance for sure, just on the vehicle. Just general average uh, maintenance. This will be a low number. Well, I guess depending if you have newer or used trucks, but let's just say on average $35 a month. And you'll probably not have it every month, but then like every 6 months, you might have, what's that, times six, it's $200 repair or $400 a year. But this can be adjusted to any number. And we could do it for each tier as well, because we're going to know the amount of plumbers and trucks in each tier. Uh, so insurance, maintenance, what other variable costs? We have equipment already. That'll be based on the job count. Anybody have any insights here? Nope. That's all right. Um, Here to try to explain my thinking of how I approach these models. All right. Oh, let's give this a title. Hourly wage rate. Tier 1 plumbers. 2 and 3. All right, and then we'll do another section for fixed costs. I guess we could put this in here, so this will be fixed costs, and these are things like general manager, I don't know, a fleet operator, uh, maybe utilities, rent if you've got offices, legal fees, accounting fees, just stuff that you have to um, that's required to run the business outside of all these variable revenue expense items. So for that, so all these are variable, so we don't need to have a start month for any of them. It'll just be based on when these begin. Now, speaking of start month, we do need to put we do need to define the month operations begin, and this will apply to all services. Actually, no, we could do it unique because maybe you start with tier 1 and 2, and then you don't add tier 3 services for a bit. So, um, put here start month. And that needs to be separated out for each one, or else you won't be able to know what it is exactly immediately. So if you start the business in the year 2023, let's say you maybe start tier 1 services in March, And tier 2 services and tier 3 services, maybe you start later in like August or whatever the case may be. So we can reference that, and then that will drive these expenses beginning as well. Now for fixed costs, let me just take, I'll just get the vending machine model here. I've been using the same fixed cost schedule for years. Um, yeah, so sales and marketing, because this could be a pretty big operation. I mean, it could be, 10,000 person plumbing company. So you're going to have sales and marketing, general administrative, and R&D possibly. Probably not R&D. I mean, it's plumbing, but yeah, I mean, I'm not going to put in there R&D. We'll just have G&A and sales and marketing. What else did we have done here? Yeah, we already got that. Now, if you were doing a franchise, I have other models for that. For franchise or licensing, and you want to collect a percentage of the business done by all the franchisees, um, and you could derive revenue assumptions. And that's a great scaling model, but that's different. Okay, so these are doing 10-year. Let's put in our month validation. So you can easily change when these start and stop, or not stop, but when they start. And if they do stop, you can just zero out the year that they stop in. Okay, looking good. These are expense assumptions. Now, other startup costs, that'll have its own tab. Other CapEx for like all your trucking and other equipment that's depreciable. All those, that schedule will be separate. It will be in here. Um, so pretty good here. I like where we are. Tomorrow I'll get into building this out into um, a monthly detail, and I believe this model should be able to be finished by the end of the week. It's nowhere near as difficult as it was to do the assisted living model, which is what I did the last 2 weeks. So yeah, we'll probably finish this week. I'm excited about it. Plumbing business, it probably could work the exact same for the electrician business. The same logic applies. Um, yeah, pretty good stuff here so far. Don't forget, guys, if you want, check out smarthelping.com. I've got the model I'm doing right now will be included in the industry specific bundle. And then, like I said at the beginning, I'm going to make a bundle for all service businesses. So, um, plumbing services, cleaning services. I've got a bunch of different service businesses here that can be put into its own bundle category, and I'll put that bundle probably somewhere down here in the sidebar. Um, Let me see. Let's see what. So dry cleaning would be services. I have actual professional services agency model that would be in there for sure. Let's see what else do we have for service business. Um, rental service. That's not. I mean, I don't know. Maybe cleaning janitorial services, and then we'll have. So it might be like 4 or 5 templates, I imagine. We'll have the plumbing business, the cleaning services in the bundle. What else? Dry cleaning service, professional services. This is like an agency model. It's a little bit different than what I just am building now, where you're actually just paying professionals a fee based on their activity. Let me think. I want to see if I have any other service. obviously software as a service is its own thing. Well, and I've got room to grow on this, so I can do. So we got plumbing, and this is actually going to be probably I'll call this plumbing or electrical because these assumptions would be the exact same uh, for electrician business or plumbing business. And then I don't know what else. What other service bit? I mean, carpet cleaning service. There's a million services businesses, and I know that's a growing field. So, uh, we'll keep adding to that bundle as well over time. Trying to see if I have any other service specific businesses here. Oh, yeah. So what is that? Three or four? So maybe I'll bundle all this up into like a $99 bundle. All right. Well, that's all I got for you. Again, you can check out all the models I've ever built for $9.99. There's well over 120 now, and I'm so excited to be building new models. As you know, over the last 7 months, I was upgrading all the startup models that I had built into adding a three-statement model to all of them and a cap table and just improving a lot of the logic for how they work. And so now that that's done, I'm now building brand new templates. Last 2 weeks was assisted living. This week's plumbing. I was also thinking about doing an real estate agency model. I'm gonna probably do a hotel startup real estate model. And I've got so many ideas. I've got a lot of written down here um, to get through. So it's fun stuff, guys. We'll just keep on grinding here. Hopefully, everyone has a great rest of their Monday, and I'll see you guys tomorrow morning at 10 o'clock. Oh man, everyone's just coming as I'm leaving, guys. Guys, we just did all of the assumptions for revenue and expenses for a plumbing business. Go back, watch the video from the start if you missed it. Um, Man, really good traffic here. 130 views. I mean, for the past year and a half, like I've only had like 10 to 15 people in these streams forever, and now it's finally looking like we're getting into the algorithms a little bit, so that's awesome. Thanks for watching. Again, if you've missed it, go back, watch it from the beginning. I'm streaming every day at 10 a.m. Eastern. And sometimes it goes longer, 2 hours, 3 hours. Sometimes it's only an hour or 45 minutes. But if you're into financial modeling, this is where to be. Alrighty, take it easy.